Hello traders, Nick Shaheen here looking at Roku. Amazing stock. Not an amazing company. I do have a couple of doohickeys from them, but I bought them secondhand from Craigslist or somewhere, and I don't pay them monthly fees. So personally, I'm at a loss why people pay them a fee. But anyway, aside from that, great trading chart. Fundamentals, not great. I believe they still lose money. They've been in business for 17 years maybe now. So it is a puzzle that they still lose money after all these years. However, caveat on that one, 23 times sales according to this sheet. So that's pretty darn expensive. To put it in perspective, I think Amazon is 4 times sales, and that's an expensive stock according to some people. 23 times sales is like pot stocks companies. So not cheap, but I have to say that the metrics may be misleading if you take the whole span of time, because the environment has changed. Not everybody wants to stream, so maybe the first 10 years don't count. But since Netflix came aboard, maybe its opportunity now is coming to fruition. So not judging it fundamentally, this is a trading comment. Before I forget, at the end there'll be a subscribe little button. Hit it. It's free to subscribe to the YouTube channel. I share videos all the time. Also, there's a free access to the chat room down below in the description. So back to, this is a daily chart, about a year's worth of data for Roku. Puzzling yesterday, today it's 12/4. 2 days ago, I think somebody downgraded it on Monday, and we woke up, first of all, to a red day, like a minus 1% in the market. And on top of it, Roku was downgraded, so it fell from like 15%, I can't remember, 160 something, and I'll just take this measurement here, 17% from top to low. It has recovered a lot of it. So is this a time to pile back into it? So maybe it is, maybe it isn't. Now they're trying to fill the gap, and I'll come closer so we can see this. Actually, I'll do it right now. Let's go to a 2-hour chart. So this is, every candle is 2 hours. And they're trying to fill that gap. That was the downgrade. When they opened, they didn't have a chance to trade anything here. Just from the close to the open, there was a gap. So they're trying to fill it. It looks like they stalled at the top of the candle in the last today, 145, but then they broke through it. So they're still struggling with it, and this is an important zone. They have the chance of filling that gap, especially if the markets continue to rally. Today the markets are up. They're trying to recover all of the losses for the last 2 days, but they're not near it. But it is a bullish day, and momentum stocks are getting bid, some of them, like Shopify, for example, is up insane. So investors are buying fear, because they wouldn't buy frothy stocks if they were scared. So the VIX spike was weird, because we still saw bids to fear stocks sometimes in the last couple of days. So they're not really scared, they're just taking profits. So in this case, this stock has the odds, has a chance to fill the gap. But I better be fast trader if I'm starting now. So if I was long, if I bought the dip, if I sold puts or put spreads or bought calls or bought the stock, this is where I start locking in some profits and play with house money. So I can stay long to see if they're going to fill the gap. If I'm starting here, I better be quick and set really hard for a trade, really hard bug out moments, so stop losses. So I should be good at saying, I'll take 10% pain and then I'm out, even if I end up missing on it, or put a level. So 145 seems like a good level, turning point. They struggled with it and then they broke above it. So it's a neckline, a mini neckline of sorts. And this level where they're at now has had history. Like this failure point, I know this is past, but it has had history. So look at it this way. Oh boy, okay, there's more history than I thought. Let me bring a scratch pad here. This way I share the levels I see. This is not by any means a recommendation to do anything with it. So this is where we're at right now, and the line carries. So it has had history with this level here, and back here it was a big ledge, right? They fell apart right here. So it was resistance. We can put an R here. It was definitely resistance, because although they had a nice rally, they failed hard, right? Then rallied and stuttered, but broke through. This is a perfect way people break out. They come back and they test the prior resistance level, for footing, and they found footing, and they went with the market to all-time highs, right? That was when everybody was all happy. So this is now proven support. But then they didn't get the chance to test it. After the downgrade, it just sliced right through it, and now they're back at it. So I could argue that it could still be support from the sense where it's not resistance yet because they didn't have the chance to do it. But I want to assume that they lost it. So if I'm starting a new position, I want to assume that they lost it and it's actually now R. So I don't usually start until I see this price action first happen. So I don't need to see all the way up to here, but I need them to see, take it at least on a closing basis and come back to it, ideally. Then I know that it's back to being support. Okay. Otherwise, they're going to hit resistance zone and then fade. Not a shame, and it doesn't mean that they're going to fail right back to the bottom. But I'm saying it's not ideal to start long. Depending on the time frame, that changes. So, okay, let's go to an hour. No, still the same information. How about 30 minutes? Okay, I'm trying to find other clues. So here's a clue here that this particular zone we're at right now has had some history on a 30-minute basis. What about 15-minute basis? Yeah, I'm not getting any more information except a nice ascending trend line. So maybe somebody will put the bug out line, a stop loss, if the trend line is lost. So eyeball, I would put it below 147.2. Then I would say, you know what, I tried, I'll catch it next time. So here's another thing. People believe in Fibonacci, and let's add to it. So this is the dip. So this is the dip. And this right here is the 50% retracement, the Fibonacci retracement. So it's not a coincidence. Machines are trading this stuff, right? Algos, AI, and all of that. You hear these terms, which means machines don't know anything but rules. Part of the rules is there are a bunch of people out there that program their machines to trade Fib. So if you have an extension up or down, in this case it's down, and you come back to half of it, you should expect some profit taking. That doesn't mean that's where it dies. It just means it's okay to take some profits, and it may do this. That's why you see the ABC moves. You know, you get a downfall and then either this way or an effort to bounce and then another failure equal to this one. It happens ABC up too. So this is just regular price action. So again, the point of this is it's wrong to chase. First of all, I have never traded the stock based on somebody else's recommendations. So if I sold this because somebody downgraded the stock, maybe I need better help trading. If I tried to catch this knife, okay, because there's a cluster of support here, so maybe that was a technical catch. But if I'm not long here and I want to start long here, I probably personally want to see a little more upside before I do it, or at least acknowledge that I need a tight stop, because if this ascending trend line breaks, then it's a pretty steep wedge. I know it's a great rally back, but the markets are also struggling, quote, at all-time highs, struggling. The media could break the momentum. You get tweets, you get headlines from state media in China, which may or may not be real. I learned that most headlines you read are blown out of proportion because the media makes money by grabbing our attention. And they can't grab our attention with the truth. They have to exaggerate the truth to get our attention. Like, wait until you see the next segment. It's going to blow your mind type of a deal. You're going to learn something you haven't seen before. You come and watch and watch and watch it, drag you, and then it's like, Same here. You know, the yield curve is inverted. You wake up and it's like, what yield curve? Oh, this other yield curve that I've never looked at. So be careful to react to headlines. Because somebody else downgraded it is not a reason to sell it. Maybe it's a good reason to buy the dip and buy the mania. It just happened on a bad day, compiled. So this was wrong. This is wrong. Somewhere in the middle lies the truth. That's why I'm saying if I want to start long now, I'd probably wait a few more ticks. If I've caught the knife here, nice work. So just Roku wise on a daily basis, it's a chart. You can't argue with that if you're a bear on it. So use levels. For me, there's a clear level here where something changed on this earnings report and they said, oh, we're all wrong about this. It's way more. It's probably tied to Disney. So let's bring in Disney, which another wrinkle in the fundamentals. So maybe. So anyway, so from here they adjusted the price on Wall Street, and they came back and tested it, and they used it as a base and came back up. So if I were to sell puts in it, I'd be comfortable hiding behind this line for several reasons. A, level wise, this was a level change, was proven support. Moreover, there's proven support here and here. Here was sky was falling in the market and in Roku. So we have higher lows trying to break out of a top. So bulls have momentum, and the bulls have defense. Several lines, 1, 2, 3. This line, I said level. This line is also the point of control from a volume profile. So this is, for the last year, this is where all the action happened in this range. Okay, this is bulk of it. This point in time right here, that orange line, is actually the mathematical busiest moment. Level, not moment. These are moments, these are level. So this is the volume as it happened by day. This is the same volume information as it happened by level. So this level, according to the last year, is where most of the buyers and sellers were active the most, I should say. So if it falls to it, it's not going to be very easy to break through it. It's going to lend some support. So, but then if they lose it, it starts looking like some sort of a neckline that's breaking, but that's a completely different conversation. So use levels. I use levels. I use volume profiles. I use prior failure and prior success lines in order to establish what are the levels that matter. So I'm not watching ticks. I'm not watching a red tick and reacting to it unless it's at a level that matters. So if arguably this is another level that matters. So if I was long and I saw this big red tick and I say, you know what, I remember what happened at 129. I'm not out until I see 129 fail, and even then I know that I've got levels at 115 behind it. It all depends on time frame and a point of entry. So, but the one thing I shouldn't do is I shouldn't react to headlines. I see a big red tick and I start shorting it down here. That is so wrong. So anyway, Nick signing out. If you have any questions, let me know.